Hello, everyone, and welcome to the Altos Trading Live Strategy Session with Jeff Tompkins. This is your host, Richard Van Rich, and we're excited to have you guys with us here tonight. We got Craig Ward in the chat, but we got a lot to go over this week. It's pretty exciting for the markets. If this is your first time on, you'll notice that your microphones are muted. That's so we can all hear Jeff and I talk. But if you have any questions at all, don't worry. We'd love to hear them. Just place those in the Q&A box, and we'll get to those throughout the session tonight and also before we sign off at the end. If you have to hop off for any reason, do not worry. This is recorded and will be available in the members area later tonight and also on YouTube sometime tomorrow. So if you're watching this for the first time on YouTube, be sure to like this video and subscribe so you can get all of our future videos as we're going to be turning out more and more each and every week. Before I bring on Jeff, let me just read through the disclaimer. Altos Trading LLC and Trade Trend / Zillion software is intended to be used as information service for subscribers and includes opinions as buying, selling, and holding various stocks and other securities. However, publishers of Altos Trading, Trade Trend, Zillion software are not brokers or investment advisors and do not provide investment advice or recommendations directed to any particular subscriber or in view of the particular circumstances of any particular person. Altos Trading LLC, including its owners, do not accept responsibility for any decisions made by subscribers using the software. Subscribers to the Trade Trend, Zillion software or any other persons who buy, sell, or hold securities should do so with caution and consult with a broker or investment advisor before doing so. All right. That being said, we bring on Jeff. Jeff, you there?
Hello.
Hey, how's it going?
Good. How's everybody doing?
Doing pretty good, man. We're doing pretty good. I see a little bit of a California tan you got there. Where you been?
Well, it's really a farmer's tan. If I took my shirt off, you'd see you'd probably have to put sunglasses on, but then you'd see some
Either like a
tan lines.
Did you see that picture of Elon Musk with his shirt off?
No.
Oh man, you gotta Google it, man.
Naked pictures of Elon Musk.
He looks like powder.
Oh really? Yeah. Not surprising.
He is
It's like Scandinavian or something, isn't he? I think he was. I don't know if he was born in South Africa or lived there or what, but
he looks like a tuna.
Yeah. Well, I burn easy. SPF 70 for me. So
I just get super red. I feel like lobster red, and I peel. That's about it for me.
Yeah. Well, it looks like we got a lot more people joining. Boris, Chris, James, Jose, Elite. Good to see you on again. Larry, Lily, Mark. Got a couple Marks. Michelle, Rosemary, Sarah, Stephen, Tim. Hey, Tim. Keith. We got some dedicated people, folks. They're on every week.
A lot of the same folks every week. Rosemary, we always see Rosemary in there, and Tim.
I love it.
Keith, yeah, all these folks. We appreciate you guys coming every week. We do this for you, and we enjoy it. So, really glad to see you guys here.
Love it, love it. Greetings, Rich from Indianapolis. Oh, he said chat showing disabled. I don't know if that's how it's supposed to be.
I didn't. It's like Zoom will just change the preferences sometimes. How do they do that? Let's see.
Got a mind of its own.
I got it turned on, guys.
Okay, yeah, chat should be working now, guys. All right, so we'll start out with our market overview, review the 36-month moving average. And we're going to open it up to ticker roundtable earlier tonight, since we've spent so much time on our past few sessions on some different strategies and capital allocation, and kind of neglected giving you guys enough time to look at what you guys want to look at. So that's going to be our main focus tonight, and then we'll wrap up with Q&A. So please, as I'm going through the market overview, type any questions you guys have in chat, or hey, Charlene, any questions in chat or Q&A, and we can hit those. Ooh, how did I end up on Agilent? Let's see. All right, so we're starting to see a little bit of a retracement today in the markets. but not going to give it a lot of weight until we see some of these significant lower support levels break. So we're overall, I think, kind of in a bull or a bear market rally, but I think that if this thing can get above, the S&Ps can get above 4,200, that could be the level that pulls us out of this bear market. Be surprising if it happens so quickly. We've only really been in it for 7-8 months. So let's go ahead and take a look at the key levels to watch for this week. Did I flip? Oh yeah, got my video on. Okay. All right, so as far as, let's start with resistance, because again, 4,200 is the one that we're looking for a break to the upside. And we're kind of starting to see kind of that 4,150 to 4,200 zone continue to serve as resistance, as it did back in June. So I think that's a lot of what's causing the slight stalling of this strong uptrend we've been in for the last few weeks, since mid-July, to stall out here. I think it's purely just the technical level that people are watching from previous support and resistance. And remember, the last time, we always analyze what happened at a support or resistance level or zone the last time it was touched. And so that, again, was back in June, kind of late May into mid-June here. And we got a big sell-off from that level. So not surprising to see that we're seeing a bit of stalling right around that same resistance zone. So 4,150 to 4,200, if we can break through this with conviction and see price move up and then come back down into a retest, I've already personally started, doing a little bit of buying on the index ETFs, like the Qs and the SPY, back in July, like mid-July. So I got in, with relatively small positions as we dipped into some of these lower support levels. And so it would really take the S&P and the NASDAQ to break through, or the S&P in this case, we'll look at the NASDAQ, to break through this zone, come back down a retest for me to add, to my long positions. But these are good opportunities when, like, if you get into, long exposure in the market, to use some of the hedging and protection strategies we've gone over in past weekly sessions. So, like, we've talked a lot about the ratio back spreads and using the VIX for insurance. So the VIX is starting to come down, and we'll look at that here in just a second, but it's starting to come down in the levels where we can start using it for insurance again. So that's why I'm kind of getting a little bit of long exposure on a relatively small basis, position size wise, and waiting for the VIX to come down so where I can, and the VIX, will come down when the S&P goes up. So when you add to a position, like, let's say you're buying the SPY, the S&P 500 ETF, and you got in, like I bought kind of down here, and you want to add to the position. Well, you want to, obviously, if you add to a position at a higher price, it dollar cost averages your base price, your what am I trying to say? Your average price or your base price to a higher level, which a lot of people are afraid to do, but that's okay if you can use hedging strategies like ratio back spreads and things on the VIX when the VIX gets into lower levels. So even though you're kind of averaging your price up and building your position, you can use the VIX to hedge when it's at lower levels in case there's a sell-off. So I'm kind of starting to look at adding, if we can get through this zone, to my long exposure on the S&Ps, and then building a position in the VIX for hedging in case there's another sell-off. But for me to add any more, to my position, I want to see this 4150, 4200 resistance zone broken. And again, we're so far over the last few trading days, Friday, Monday, Tuesday, today, or have stalled at that resistance zone. So we need to be looking at levels of support, and there's kind of a support zone here. See where this price consolidation was here from back in early June, right? And we're kind of around there now. The next major one is at 4,000. So those are our main support levels to watch. Let's see. So again, this is resistance, support, and support. Okay, so we're at a support level on the close today on the S&P. If this one breaks, then we're looking at 4,000. And then if we can hold this 4,100 support level, then we're looking for price to break through 4,150 to 4,200 for stronger bullish sentiment. So that's the S&P. Then let's take a look at the NASDAQ and look at the Qs. So kind of similar as it relates to resistance. So you'll see that we've got from also back in late May, early June, resistance and then sell off from that level. So similar as on the S&P, we're there again. So I think we're seeing this kind of stalling price action because we're at this resistance level where there was a previous sell-off. Remember what happened at that level last time price was there? That's what buyers and sellers are analyzing. So there was selling behavior back when we were at this level previously, and we're back there again. So it's common to see price stall there, and we're basically waiting for a catalyst to push it higher or lower. But you can see that it also served as support. We got some big moves off this level on the Qs in the past. So that, again, want to see this break and then come back down, use it as support. Because right now, this is a resistance level. So we need it to break. We need to see closes above it, right? So far, price is going above, but not closing above. It's closing below. So we need to see closes above and then a retest. And then it has a lot more room to run. If we get another sell-off from this level, there's some support down around like the 305 to 306 zone, and kind of around the 295 to 300 zone. All right, so we have a lot more support on the NASDAQ 100 than we do resistance, which is good. And which is another thing a key to analyze is how many support and resistance levels do we have nearby? Well, we have 3 strong support levels, but only 1 real strong resistance. Because if we can get through this, there's a lot, less in the way as it relates to resistance to stop the Qs from moving up higher. All right, so let's also look at the VIX. All right, so I mentioned the VIX has really come down a lot as we've rebounded. One other little trick you can use that I look at on the VIX is And it helps to do it on a side-by-side chart. But when you see like VIX come up to a resistance zone like this one up here that we've looked at previously, and then you look at the S&Ps and see how far they moved up from, because remember the inverse correlation. So when the VIX is coming down, S&Ps are going to go up. So like look at the last time the VIX was at these levels and how far did the S&P move up relative to how far the VIX moved down. So if you see some of these more gradual moved, so see how steep this one was or how steep that one was. These are a little bit less sloped, more gradual slope. This one not as deep or to the lower price levels that these were. That can also kind of indicate the market sentiment or the behavior that's going on. Is this like more of a panic sell? So like when you see a very sharp rise in the VIX and a very sharp drop back down to where the rise started, that's more of like a panic selling. And generally for me, an indicator of a good time to jump in on a rebound. And same thing there. But what we really want to see is VIX. See how every time it comes down to the 20 level, it's spiking back up. We want to see it come down and stay at that level or below, at or below 20, without these, sharp spikes and then either very steep declines or gradual declines. We don't want to see this is like a mountain range. We don't want to see this continue if we want to have conviction of more steady bull market or getting out of this bear market and seeing a more stable rise in equity prices. So we are good news. We're staying below the 25 level. So VIX today closed 23.93. It spiked up a little bit, right, because of the sell-off in the markets. But 25 is the one to keep a very close eye on for the near term. So like the rest of this week, this is resistance on the VIX. So if we can stay below this 25 level and we don't see much of a sell-off from those resistance levels we looked at on the S&P and the NASDAQ, then this is probably just kind of a brief, sell-off. And then we have very strong support at 20. The thing with this is that we, again, need to not see the VIX bounce off 20 like it has been doing this entire year. We need to see it come down below 20 and stay there. So that would be like, kind of zoom out. So like see back here in 2019. So this is the 20 level. So remember 2019, we had a really, really nice bull run, really good overall market performance. Look what the VIX did there that year, right? So this is what we want to see the VIX doing, is using 20 as resistance instead of support, to get a better, sort of indication of the shift from bear market sentiment to bull market. But the good news is bear markets historically always last less on average than a bull market does. So bear markets tend to last less. So we're already 7 to 8 months into this thing. So people are starting to kind of come in and look for buying opportunities. And so that's what we're seeing right now. And we're seeing the VIX kind of come down as that's happening, but we want to really see it stay below and use 20 as resistance. So we kind of saw that. You'll often see that happen towards the end of a secular bull market. And that's what was happening here in 2021. So you'll see a lot of spikes above, spending time below, but prior to that happening, when you see the VIX spend a lot of time above 20, that's another kind of clue of a shift in secular bull to bear markets. So you can kind of see here, looking at like pre-2020, what was happening with the VIX compared to, like, if we just put a line right here at the start of 2020 and you look at the left side, look how much time the VIX has stayed above 20 than it did, going back the previous couple of years. So 2017, 2018, 2019, different picture, right? So we want to see it get back to kind of this picture at least, and not continue to use 20 as support. So near term, we're watching VIX. We want to see it get below 20, and then we want to see S&Ps and NASDAQ 100 get above those resistance zones. So we'll continue to monitor that. Could happen as early as this week, since we're kind of playing around with them now, but maybe more in the coming weeks. And so let's also take a look at the what's happening with the S&P. So this is a monthly chart, and if you've been on past sessions, we're watching the 36 period moving average very closely. And look how much buying occurred right off of that 36 month moving average, which is kind of right around 3,700. And so if we can push a button, remember on the daily chart, we marked this 4,200 resistance level. It's even easier to see on a monthly chart. See how there's all this support / resistance around 4,200. So we can again see that S&P get above 4,200, then we may see something not probably as dramatic as we saw back here in this parabolic move up, but we could see something more significant in terms of a move up in the S&Ps. And we just see that often happen around this 36 month moving average. That's because the way that secular bull and bear markets work, because the major indices in the broader stock market has a long-term upward bias. So over the very long term, even since the inception of the stock market, it goes up a lot over time, right? But with periods of recessions and bear markets and market crashes and all these things that occur, and so this is a commonly used institutional buying zone at the 36 month moving average. So a lot of times, so if you look at it, a chart going all the way back to the beginning of the stock market, look at a monthly chart, you're going to see the S&P and the major indices spend the vast majority of time above the 36 month moving average. And so that serves often as during a pullback or a bear market. And you can see how far above we got it here, and what it took to get us back down. And this is called mean reversion, to mean revert back to the 36 month moving average. Look how far that had to go to mean revert. This was fairly far, but probably only about half of this one. This also, probably about half of the current one. So we saw we're in a bear market because we saw such a diversion between prices and the 36 month average. But again, that can create great buying opportunities. And so far it has for July, and we got a strong close above on the S&P. Then we'll take a look at the NASDAQ as well. And again, guys, this is why I started kind of coming in and buying some of these index products like the Qs and the SPY back here in July, because of the opportunity here. But I was doing it very cautiously because we can certainly still dip below. And as I promised, if that happens in the coming months, we'll follow up with that on how to handle that on our weekly live sessions, because that can actually create some really nice opportunities too to the short side. But more often than not, it doesn't happen. Once we get a strong close above the 36 month moving average, price tends to move up off that level historically, but not always. So if it doesn't, we're gonna be talking about a different strategy to play that. But so far, it's looking very bullish on the majors, on the NASDAQ and the S&P. So yeah, I'll go ahead and pause there, see if you guys have any questions, and then we can open up to ticker roundtable.
Yeah, Boris was kind of curious. He's wondering, since you look at this, and a lot of people look at this as more of a bear market rally that'll likely top out somewhere. He said between 42.30 and let's say 42.60, and then potentially continue to drop rapidly after that. Do you kind of feel the same way, or do you feel like there's a possibility that we could maybe get over 4,200, let's say, and then maybe use that as support and potentially maybe reach up for 4,600 or something? Do you feel like that's possible? Do you feel like it's more of just a rally that's kind of going to reach
I mean,
up?
hard to say, and I really try not to try to predict things, and people are surprised. Like, don't you have like a conviction of what it's going to do? And I don't know what it's going to do. But what I know is where buyers and sellers come into markets, and so that's why I use static and dynamic support and resistance to identify those buying and selling zones, because that's what kind of dictates how I build my positions or structure a strategy. So yeah, I don't know, and that's why I just said 4,200 could serve as a resistance, and we might not be able to break through it, and we could come back down and close below 30. Right now the 36-month moving average is at 37.78, so about a quarter, or quarter century mark, 37.75. If we close below that in August, then my position would change, and I would not just increase my hedge, but I would probably take a bearish weight on my trading account, my whole portfolio. But it's too early for me to know that or tell it, just because of where they're currently trading. For now, the sentiment is on the bullish side because of the support that we found at these 36-month moving average on both the S&P and the NASDAQ. So there's a few different things that could happen. This could serve as resistance, and we could consolidate, and you'll see that happen like back here in the 2015, 2016. We kind of consolidated around the moving average. The last 3 times we've come off of it, it's been strongly to the upside. So far, this looks more like the last 2 pictures. See how they're both inside bars with strong closes. So see how there was a big, I mean, they're almost identical. There's a big sell-off. So wide ranged bearish candle, dips below 36-month moving average. This one was huge. This was the Corona crash. And then the next month, we get a strong bullish close, so that the month closes near the high of the candle, or the range, above the 36-month moving average. And then our confirmation really is if price can get through that. And these are both inside bars. So the high and low of the next month's candle was inside the range of the previous month. Exactly what happened this time. See that? The high and the low are within the range, strong bullish close near the high off the 36-month moving average. So our confirmation is really to get, on the aggressive side, it would be trading above the inside candle, but on the more conservative side, I want to see price get above the high of what they call the mother candle, the one that's engulfing the inside candle. That's what I'm looking for. So that's why 4,200, not only is it a level of previous buying and selling, it's also, if the level, if we can get above that, would open the door for, a picture similar to what we've seen in previous years. But as I was about to say, we could also see, consolidation before a move back up. the nearest certainty in the when we're discussing the major indices like the S&P and the Nasdaq is they're going to go up to higher prices over time. If they didn't, then if businesses weren't growing and things like that, then we'd be in a whole lot of trouble. So over the long term, the broader indices go up. So the key really here is to know, when is that likely to happen, and to what magnitude, and really to know, like, if you're gonna have a long bias or take long positions in the market, the more opportune times to do that. And because you don't want to, obviously, imagine how many people were buying up here when the S&P was at above 4,200 last year, and how many of them just got crushed because they were buying, way high off of this 36-month moving average, which is not an ideal thing to be doing, unless you know what you're doing and you've got a good hedge in place. If something, when it inevitably mean reverts, every security mean reverts and moves off that mean. And so that's kind of what's happening now. But yeah, we won't really know the answer to, I think it was, you said, Boris, won't know the answer to that question, Boris, till maybe another month or two. We could know this month, but we want to see a close above 4,200. If we see consolidation, as long as we stay above this 36-month moving average, so if we just kind of stay in this range here, that's actually going to add to the bullish sentiment. As long as, like it did here. So even if we're like kind of ranging, as long as we're getting closes above the 36-month moving average, this in this case happened, 1, 2, 3, 4, 5, 6, 7, 8 months we spent kind of just bouncing around this moving average before it finally took off. I don't think that's going to happen again here. That's why I kind of highlighted the difference in the price action here from the last two tests of this moving average. But we'll have a better picture. But definitely watch 4,000, because if we close below 4,000 on a daily basis, then we're more likely to come down into this moving average again. So again, those are the levels we marked on the daily chart. The 4,200 resistance, 4,000 support.
Gotcha. Let's see. SP has a question, or a seasonality type question. Usually August and September can be choppy months. So would you wait until, say, the end of the month for clarity on any sort of hedges or anything?
Yeah, that's a good question. Yeah, they can be. The summer months can be a bit tricky. I think we're in a little bit different scenario this year, but I don't wait for hedges based on seasonality. If the VIX gets down low enough, I think it was 2 weeks ago, we went over the risk reversal trade. So if the VIX can get down low enough, I put on a risk reversal. No matter whether have long positions or not. If I don't have any long positions, I use it as a speculative trade, to make money. If I have long positions, then I use it as a hedge. And that's what we got into capital allocation last week, because we're going to get into that more in the coming weeks, because you don't want to, there's a right or wrong way to do a hedge. There's actually a cool little trick and things I'll show you guys with that. If you go to, like, if you work for like a trading firm, or work on the floor at the NYSE or the Nasdaq, or this is like a part of the test that you have to pass to know how to structure a hedge. So we'll get into that probably next week or the week after. But yeah, you want to, if you have a long portfolio, if the VIX gets low enough, I'll just hedge it no matter what, because I can put it on for basically no debit with the risk reversal. That's what we went on over a couple of weeks ago. So I can sell puts at a very low price, even if the VIX gets low enough. It hasn't in quite a while. I can sell them low enough to at a strike that it's at an all-time low the VIX has ever existed, based on the Wednesday AM settlement price, which is like 9 and some change. And if I can get, especially if I can get down there and sell puts, and then use that premium that I collect to buy calls or a call spread. That's a risk reversal trade. And I may also even incorporate a ratio back spread into that. So that, yeah, it's mainly the VIX level more so than the seasonality. But good question and good point, because you may look at setting that, those hedges up for longer periods. Like if we're in the summer months and, trading volume thins out and the markets aren't, moving a whole lot, then, you might not want to put the hedge out only like 30 days. You may want to go out like 60 or 90 days. But that depends on other variables as well. So.
Awesome. He said, thanks for that.
Sure.
And Boris did as well. And I wanted to give it's like Chris had a comment for the Zillion team. He said, I love that we have drawing tools on the expanded charts now. So it's an attaboy for Homa and Daniel and crew.
Oh yeah. Yeah. I was going to, at the very end, I was going to run through some of the updates we made to the Zillion platform, because I know we have a lot of Zillion users on. But yeah, we'll let them know we're really excited about it too. They made some really cool updates.
Cool.
Yeah. So
That's all I got for questions.
all right. Yeah, like you can filter now on the columns and buy and sell and cloud and all that. So pretty cool. But we'll in the last few minutes kind of go over some of the updates. All right, well, let's go ahead and open up to Ticker Roundtable and take a look at some tickers and see if anyone's put any suggestions in yet.
Yeah, it's like Jose got in front. He asked for a PayPal or Amazon. PayPal.
Okay, we'll do both.
Yeah.
Yeah, I remember we looked at PayPal in one of our last Ticker Roundtables.
Recently we did.
Yeah, remember how I was really intrigued by it, and I actually was following it for a while because I was like, oh my God, this like 70 support level, 70 to like 80. I remember we spotted that, and I don't know if it was Jose that suggested it last time or one of the other members, but I was really intrigued in it and projected that the stock would move up from that level, but I haven't really checked it lately. So I'm glad that we're looking at it. So it has moved up some, and it did break out of the 70 to 80 zone, but it's got a little bit of resistance to contend with here. Looks like kind of around 90. Let's see. 95. 90 to 95. So I think long-term PayPal has some potential. It's a good company. They're acquiring a lot of other good companies, so I think it's got good long-term fundamental potential. But on a technical basis, it still is in this kind of range. But the 70 support level, I think, was a really good buying opportunity. It's now trading at 89, so it's way off that level now. But I think back when we looked at it, I was kind of playing around with that level. So yeah, this is still a good one to watch. So I would say, 100 is being, a century mark, an important kind of more psychological level to keep an eye on if the stock can get above 100 again. But kind of this 90 to 95 resistance zone is the one I'd really be watching. Maybe
It looks like earnings. A lot of people are posting in the chat saying earnings just came out and it's like did $100 in pre-market or the after hours. So
oh, it did. Okay. Oh, that's interesting. So if it can close above 100, that might be what it takes. Even if it's on an earnings gap. Generally, when you get a positive earnings response, the stock goes way up after a QE release. They tend to continue to move up for a period of time after that. So yeah, I'll have to keep an eye on that. That's interesting. All right, glad we looked at that. And then what was it? Amazon was the other one?
yeah, Amazon.
It's finally broken out of this terrible range it was in. Yeah, I remember we looked at this one too. So it was stuck in this range for like May, June, July, through several months. I don't know if this was an earnings reaction, but looks like it broke out. We got the green divergence cloud shift kind of down here at when the price is at the bottom of the range, and we got some, buy signals from trade trend. It's finally out. We got another buy, but I don't particularly like buys on a, into a resistance level. Because we've got, it's kind of like 136. So this is a really strong, so it's kind of like what we just looked at on the S&P. This is why we're seeing this stalling right here. It's kind of interesting, isn't it, that we just looked at the S&P, and it's, obviously a lot of these stocks are components of the major indices like the NASDAQ and S&P, but that you see a lot of similarities in how the price reacts as at a particular point in time. So like right now, this looks very similar to the S&P. You look at these three candles and it's like, are we looking at the S&P or are we looking at Amazon? Or even the NASDAQ. But yeah, so you'll see this 136 resistance level here. It was previously support. And it's a very strong level. So I'd be looking for this, and I'm going to make it more of a zone. 136 to 140. The reason I'm making it the zone is because I see this price action here at the 140 level. I see a gap down into that level. So we finally got out of this range, this 3-month range, but now this is support and these are resistance. So we want to get out of this resistance zone before I would put, personally, if I were to place any bullish strategies, build any bullish, positions or strategies around Amazon, I would personally wait for it to get out of this resistance zone. And if it comes back down to, looks like this is like a 127 support, roughly. Wait for that to hold, and maybe that could create some potential buying opportunities if I see this level hold down here around 127. So another good one to look at, but we're out of the red divergence clouds. A little blip of a green one here as we rebounded briefly, but these are huge red divergence clouds. And we finally formed a decent green one back in beginning of July. So.
All right. Let's see. Martha wants to see XLF.
What was the last letter?
F is in Frank.
Okay. Yep. Financials Spider ETF. XLF's a great ETF. It's good liquidity. It's got pretty predictable price action. It's really easy. It's one I trade every so often, or do options trades around. We issue trades on the XLF in our options advisory services as well. So XLF right now is also broken out of its range. So I see kind of 33 as a strong level of support. Previous resistance. We broke through. It's come back down to retest. So the main level I'm watching right now, because it's closest to the current price today on the close, the XLF is at 33.06, would be for this 33 level to hold. If so, then I would look for plays to the long side as we traded into this level today. But if it breaks and closes below 33, then we're kind of back in this previous range, and may see lower prices in the XLF. But generally, when you see a close above a strong resistance level, and then a retest, as long as the confirmation I'd be waiting for here is, will price stay above 33 and then start moving back up. And usually if that happens, it's a pretty reliable indicator there. We can also see, let's take a look at the options chain and see like what the implied moves are for the XLF. And we can even look at like probabilities of touching. So like just over, let's see. So 33. So we're at 33 support. So our next resistance, is really kind of around 34, 33.50 to 34. So let's just go out like 30 days. So if we think the XLF is, broken out of its zone, it's coming back and retesting support and are waiting for confirmation that that support level holds and it moves up off that level, then we might want to start looking at like, what's the implied move? So that's going to be over here between now and, for the next roughly month, between now and September 2nd. The implied move is plus or minus $1.94. So let's say the support level holds and it moves up. This can help me place my profit target, right? So this is another thing I use, even if I'm not trading the options, if I'm just buying shares of XLF, where do I place my profit target? Well, partly based on the supply and demand points or support and resistance levels that we draw in our weekly classes, but also I use option statistics. So this is basically with 68%, almost 70% probability of a 1 standard deviation move, we can know with a pretty high degree of accuracy what price the security will reach. And we can also even look at probability of touching that price. So if this is telling us that, okay, we're coming down to a support level on the XLF, bouncing off 33. If it does do that, it bounces off 33, it moves up. And I want to know, and let's say I take a long position, what are my probabilities of moving up and how far? Well, the options market is pricing in a $1.94 move to the upside or downside. So let's just say, if we were to jump in at 33, I'm not saying to do this or that this is how I would do it, but let's just say we jumped in at 33. Well, it could move up to, well, it's at 33.06, move up to, $35. So then let's look at the 35 strike and the probability of that happening. So the options are telling us that there's only about a 33% chance of it reaching that 35 price level. Not really the best, odds for me. So if I am going to take a long trade, maybe I want to, place my levels or my profit targets at a level that has a higher chance of the security reaching, right? And so we can use probability of touch to do that, and start looking at some of these higher probabilities are going to be at lower prices, but that can give us a good indication of, the potential move behind this off of that level. Also, we can look at probability out of the money. So like, what's the chance that any of these particular strikes are going to finish, out of the money? In other words, the stock will be below that price level because we're looking at the call side. We can look at implied volatility. So we got volatility skew here. We've talked a lot about that in past weeks, right? So we see a decrease in volatility levels at higher prices. And so that's an interesting thing to take note of. There's more volatility near the at the money strikes. We're seeing volatility skew in it for it to, starting to decrease. And then it goes back way up to the other side, other range, as you get up to higher price levels. So these are all things I would look at kind of to place profit targets and help make decisions. Also, the volatility skew between the put and the call side. So, if we look at like the, the implied move, so $1.94, so that puts us at 35 to the upside. We have implied volatility at 19.46%. If we subtract that, then we're looking at around 31 for a strike. And we see implied volatility at 24%. That's a pretty big skew, 19.46 to 24.89. So there's a lot more fear of a sell-off. Now, if you use that as a contrarian approach, then that could be looked at as bullish if we get a bounce off that 33 support level. So these are kind of all, tie together and build a picture of what's, what the market's telling us, what the options market is telling us, as well as the, buying and selling or supply and demand points on the technical levels as well. So hopefully that helps.
pretty cool. Yeah, that was awesome. Moshe has a request as he spits tobacco. He says, you look at live cattle.
Live cattle. So futures.
Ding. Yep.
You'll have to give me the ticker on that one. I don't know what the cattle ticker is on futures. I can look it up.
LE.
Okay. Sure I get the right. I think we have it in here. So yeah, we do. Yep, someone must have went cow tipping today. I don't know what happened here. It's crazy.
Like a bottle rocket.
It does. Shooting star. Interesting. All right, so resistance got about right around the 144 level. But I mean, this price action is crazy. I would probably not be trading when I see a wide range like this. I would stay away. Stay away. Yeah, so we got resistance support from the 135.50. This is a very rangy futures market, obviously. 138, so that's support as well. 39.50, and a lot of support around 141. So pretty much all of these are support. But my key takeaway is when I see a range like that, I would stay away. And hopefully, most of you were long. And I'm not sure what happened. Moshe, do you know what happened here today with cattle?
He said he missed it. He said seasonal. Yeah, I was thinking it's seasonal as well.
Yeah. Interesting. All right.
You ever buy those seasonal lists?
What is it?
You ever buy like a seasonal list where it kind of shows you the futures that who puts it? Was it Moores or somebody?
Like it shows like seasonality of like,
yeah, like going
Stocks or
back like first 3 years and last 5 years and last 20 years, kind of showing you what months and
yeah.
commodities.
Yeah, there's a lot of services out there that put those out, the seasonality stuff. I think it's the one that Financial does that. There's a lot of services out there that do those seasonality things. I think it's good, like certainly for futures, like commodity stuff and futures, like cattle and seasonality is a big deal. Like, you start getting into like corn, oil, that stuff I think holds a lot of weight with seasonality stuff. I just don't follow the seasonality behind these futures contracts very closely. Futures I mainly do. I mean, I have traded a lot of these other like lumber and more exotic futures, but for the most part, I stick with like the E-minis, you know, the ES, the NQ, and those. So
Yeah. Let's see. M wants to see SU. S is in Sam, U is in unicorn.
okay, Suncor, I think, right? Yep. So there's currently an open buy on Suncor from Trade Trend and Zillion. So that was a nice buy signal right there, triggered. It's still an open signal coming down pretty close. The trailing stop's gotten tightened up quite a bit. So that generally tells us when you see a trailing stop tighten up that closely. The move may be kind of stalling or reversing. But definitely a nice signal off this 30 support level. I've drawn it further out, but now, at this point, there's some resistance here around 34. And you see how price almost probably closed it at what was a close here. So we closed at 33.94, right below 34, and moved off of it. So see how, there's all this resistance around that zone from the past. And then here it became support because price broke through it. I mean, some pretty incredible close touches at that 34 level. And then we got same thing here, but closed right below it. So I think this was a nice buy signal off the support level. This was support, but it's kind of run its course, and I wouldn't be surprised if this hits the trailing stop and the signal is, it goes flat after that. It is in a red divergence cloud as well. Although, yeah, it looks like it's still in the red divergence cloud as well.
Okay.
Let's take one more, and then I want to quickly just show the really cool new features that are on Zillion.
Okay. Let's see. How about AMD?
Advanced Micro Devices.
Mm-hmm.
Yeah, this stock's been on a tear, which is would have been a good buy back in kind of June, July timeframe. But let me zoom out a little bit. Yeah, I mean, it's just, there was support from way back, but so kind of similar to Suncor, we had a nice bull run, here July, but we're coming up into resistance now. To see how there's a strong support from back February and March, then became resistance, broke, became support, broke, became resistance. So the last time this was support, then broke and then became resistance just on this one day on that candle. And now it's resistance, at this point. So this is a resistance level. And always look at the magnitude of the move prior up into that level. So this was a very parabolic move up into a resistance level. So probably most likely we're going to see some degree of retracement or move down from that 100 level. However, if it can break and we get a close above 100, then it becomes support and creates buying opportunities. If you weren't already in this move, we had some very nice trade trend buy signals here. This one, and what entry would have been around like 80. Exit on that one would have been around.
I think earnings came out today
37.
for AMD also. And I heard it's going, like you said, it's going the other way. It's down to like 93.
Okay, so it had a negative reaction to earnings. So there you go. Then yeah, it's we won't know obviously until pre-market tomorrow, or market open where it's going to open up for sure. But yeah, just because of the strong resistance, and so I didn't even know the earnings were slated for today, but without even knowing earnings, you can see where the level is, and if it's always important if you're trading any security that's if it's a private equity or it's an equity, then you have to know if there's earnings pending, especially if you're in the stock. And so often if you see like a stock coming up into resistance and that resistance level holding on the day the earnings come out, like it did here, that could be a word of caution there, just because it has all this resistance at that level, and it already had such a big run up into earnings. So interesting. All right, well, great. Those are great tickers to look at. Thanks for suggesting those. Hopefully that helped out a little bit. And we'll do more also in the future when we do our ticker roundtable with the options analysis, because it is also very helpful. And we actually, could have looked at, at this point, earnings has already been released, but when the market was open today, we could have looked at some of this, like with AMD leading up into earnings and looked at some of the volatility skew and things. But we'll do that more in future sessions. So you guys can kind of get an idea of the probability analysis and how to like use it to set profit targets and all these kinds of different things. All right, so just real quick before we sign off, and if you guys have any other questions, definitely feel free to put those in the chat box. But want to just kind of run through some of these updates on the Zillion platform. So we deployed a new version of Zillion, I think it was a couple days ago. And so here's some of the changes. So filter coloring is now in the scanner. So that's a new feature. I believe what that's referring to is you can filter like by the cloud color, bullish or bearish, red or green, and in each of the different column headers. There's also a new debug mode to help with troubleshooting. So that's a new feature. I'll probably have to have Daniel and Homa on to demonstrate how that works. But it may be an automated thing. We'll have to check with them on that. We have a test feature for the email alerts. So if you guys recall, it looks like here's the debug mode, that you can have trade alerts emailed to you for all of our signals for any security you want. You just have to add it into your watch list. And so there's, I think, a test feature now for those. So that's new, where you can test to see if, the alert gets sent. We've also added server redundancy. So we have a backup server now. So there's no downtime. So we're making updates and changes to Zillion, there's a backup server, so the platform won't go down. There will be no downtime, which is obviously crucial. So we've got that all set up. And then there's been improvements in the signals and scanner syncing. So like when you're looking for signals and comparing them into the scanner, there were a couple of outlier cases with a few signals that had bugs, and those have been fixed. And let's see if there's anything else. Richard, were there any other updates that you recall that
Let's see. I think someone said something about the being able to use drawing tools and when the chart is expanded.
Yep. So that works. So you can now draw. So you'll remember in the past, once you expanded the chart, you weren't able to use the menu bar on the left. So now you can go ahead and do that when you have the chart expanded without having to collapse it and then draw and then re-expand it. So that's also definitely another one. Was that it, Richard, on the updates? I think that
Yeah, I'm
covered
trying to
pretty of it.
remember. Yeah, like, I know there's an email that they sent over. They always like whenever we get updates from those guys, they do like 6 or 7 things.
Yeah, we deploy it all at once, but that's the server redundancy is really great because that will streamline the update process and as we make upgrades and different things to the platform. And just so you know, guys, we're currently exploring real-time data solutions. So we'll keep you updated on that as well. But we're looking at some real-time data solutions as well as, and these are kind of like, not public yet. So we haven't announced any official releases, but also we're working on some broker integrations so that with certain brokers, you can actually place your trades within the Zillion platform without having to go over to your broker platform. So working on some really exciting stuff coming forward with Zillion. So we'll keep you guys updated on that. And with that, we can wrap it up to see if there are any other questions remaining.
Let's see. Forrest asked one I figured I'd ask. Does the implied volatility hold true in a crashing market?
Yeah. So yeah, in crash markets, you see implied volatility spike, and you'll tend to see widening skew. So that can actually be an indicator of a market crash as you see skew start to widen and IV go up on the put side. So yeah, definitely. We can go into that in more detail as well in future weeks.
And then SP wants to know if the Zillion updates are sent out via email.
So we generally go over the updates on our live sessions like we did tonight. We can, I think that's a good suggestion. I don't know if the development team sends out official updates, as far as it relates to like backend stuff that like server redundancy and those types of things, but we can check on that. I think it's helpful for everybody to know. And we also can post those in our Discord and make it available to you guys in the members area. So
there's a ton of like really positive feedback. Like Rich said, loves the update to the platform, just keeps getting better and better. Thanks Daniel and the rest of the development team. Yeah, I think everybody's just excited. It's like everyone can tell that, this is, we promised from the beginning that Zillion was not just going to be done when we launched it, but we were going to continue to improve it. And, for us, it's a long-term project. This is something that this is kind of like one of the pinnacles of what we've been doing, what we've been growing to is Altos for the past 7-8 years, is being able to give something like this out to you guys. So yeah,
absolutely.
It's super proud of it. And like I said, the best still to come.
Yeah, absolutely. Well, thanks so much for all the kind comments, guys. And thanks everybody for all your participation this week and all the great suggestions. And we'll see you all next Tuesday.